Good morning. Welcome to Stock Market Today for Thursday, July 11th, 2019. I am your host, Dan Russo, Chief Market Strategist at Chaikin Analytics. I am on Twitter at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to ChaikinAnalytics.com/today. Sign up for a free email. Follow along with this show. Get daily stock ideas for you to consider every day in your inbox before the market opens. And a special thanks, as always, to StockCharts.com for hosting this show every day in the 9:15 slot, and to See It Market for posting our work on their site every day. Additionally, you can head over to the Chaikin Analytics YouTube channel, where you can find this recording as well. So U.S. equities moved higher Wednesday, with the S&P 500 trading over 3,000 for the first time as Fed Chair Powell addressed Congress with comments that leaned dovish, and that sets the stage for the expected July rate cut. Treasuries were mixed, with the curve steepening. The dollar was weaker on the major crosses. Gold settled up 90 basis points, and WTI crude gained 4.5% on bullish inventory data. Energy, comm services, and tech were the sectors that led the way higher, while financials, industrials, and materials underperformed. Breadth on the New York Stock Exchange, positive 1.7 to 1. Breadth on the NASDAQ, positive 1.2 to 1. So again, your leaders, energy, comm services, tech, throw staples in there as well. Fins, industrials, materials, and utilities underperformed. And as we get to the desk this morning, we are adding on. Futures are up 30 basis points after trading to new highs yesterday. Asian equities were higher overnight, and European markets are stronger here this morning. Treasuries are mostly stronger, 10-year yield at 2.06%. Dollar is lagging on the major crosses. Gold is up, adding 80 basis points here this morning, and as is crude. Crude is adding on, up 60 basis points here to get things going this morning. And here's your chart of the S&P 500. Traded above 3,000 for the first time before pulling back to settle off the best levels of the day as dovish Fed comments drive stocks higher. Support remains in the 2,950 to 2,900 zone, and I think as long as we're above that level, we have to start thinking about a continuation of the rally through this resistance mark at 3,000, and it's kind of a soft resistance mark. We kind of tagged it yesterday and then pulled back. It's more psychological at this point, I think, than anything else. But really what's driving the view is momentum. RSI confirmed the breakout by shifting to bullish ranges, and it maintains in bullish ranges. So what are we looking for again? For those of you who aren't aware of how I look at the markets, RSI is my momentum indicator that I look at to confirm what we're seeing in price, not vice versa. Breakout in price with the indicator holding above the 40-50 level and actually becoming overbought, that is a bullish signal to me. And now what we're looking for is on any pullbacks and tests of support for this indicator to hold above 40. That's the lower bound of bullish ranges for this indicator. Should we hold above that mark, that is a momentum confirmation that stocks are likely to head higher. Notice the word likely. Is it guaranteed? Absolutely not, but we're playing a probability game here. And when we connect the dots, use the data points to figure out what the odds are of the market moving higher or lower. So I think as long as the RSI is above 40, odds are we move higher. And what would increase those odds would be if Chaikin money flow would get out of neutral ranges. I've been saying it for a couple of days now. We've been dancing with the zero line. We're back above it here this morning, looking for some sustained movement above zero to give us that money flow confirmation. But so far, odds favor a continuation of the move higher for stocks. Diving in now, what am I talking about in my note to Chaikin Analytics clients? Our market in a minute tells us that the S&P crossed 3,000 for the first time. Powell's dovish comments paved the way for a rate cut. Now, it's important to understand that a 25 basis point rate cut is fully priced into the market right now. Prior to the jobs report last week, the market was actually potentially thinking about a 50 basis point cut. Those odds got cut substantially after that jobs report, so we're still looking for a 25 basis point cut. Anything more than that would be a big surprise to the market. Breadth metrics confirm the bullish price trend. We'll take a look at that a little bit later in the show. Retail refuses to join the rally. I've been bearish on retail. We're going to look at why. Futures point to a higher open here today, as I said. Taking a look now at the power bars. Dow up 31 basis points yesterday, 9-3 bulls to bears. S&P 500, 48 basis points to the good yesterday, 135 bulls, 70 bears, so nearly 2-1. NASDAQ greater than 2-1, big outperformer yesterday, up nearly 1%. 29 bullish or very bullish stocks, 11 bearish or very bearish stocks. Small caps continue to underperform. Now, they were up 17 basis points yesterday, but that underperformed the broader market. 561 bulls, 303 bears. Downtick in bonds sent yields slightly higher. Energy was the big leader at the sector level yesterday, up 1.3%. Still a bearish looking group from a power bar perspective, 11 bears to 3 bulls, but that big oil rally, 4.5%, helped the energy stocks. According to the Chaikin power bars, large cap stocks and small cap stocks are bullish. Taking a look at our stock of the day now, let's look at retail value. It's a real estate stock. Closed at 36.17 yesterday, up 3%. RVI is the ticker symbol here. Very bullish rating due to very attractive financial metrics. Very strong price volume activity, positive expert activity. When we roll up the 20 factors, we come out with that very bullish rating. You're going to notice nothing new here on the chart. We're going to get to that in a moment. Strong trend, strong industry group. Relatively new stock as the rating is new. But hey, we have a very bullish stock outperforming the market with bullish money flow above a rising long-term trend line. Now, you hear me talk about a weight of the evidence approach and checking the boxes, and we run through our analysis every day. Something really good that we've rolled out at Chaikin Analytics is a checklist to go through just that. You hear me talk about it all the time, right? What are we looking for? Bullish and very bullish stocks and leading industry groups that are outperforming the market. We give you the checklist here to let you know if those parameters are in place. And then from a timing standpoint, what are we looking for? We're looking for oversold stocks above their trend line with strong money flow. We give you those parameters as well. So you can quickly see the process. Chaikin Analytics clients, every time you load in a stock, click this checklist. Take the weight of the evidence approach. Here it is. For a stock like RVI, 5 out of the 6 factors that we look at, or aspects that we look at, are green. That's a weight of the evidence approach. RVI looks compelling to me other than the fact that it's closer to overbought than to oversold. So type of name we want to own, you can visually see that pretty quickly now with this new rollout of our checklist. And we're going to add RVI to a bullish watch list. And when it becomes oversold, all else being equal, it looks compelling as a long idea. Sector tracker now. Looking at the movement of the major sectors over the last 5 days. Strong rally in energy stocks yesterday boosted to the top of the list. Comms also had a good day on the back of some strength in internet. Up number 2 over the past 5 days. Real estate continues to trade well as yields head lower. Discretionary utes and tech round out the sectors that are positive over the last 5 days. Staples and fins are middle of the road. Healthcare, been a bit of an underperformer. Industrials, trend remains lower on a relative basis for industrials and materials. I'm starting to warm to the group, but they're making it difficult for me. A couple of days ago, I wrote about how materials were trading better on an absolute and relative basis, and they've promptly reversed course. Obviously, I will not remain dogmatic in my view. If materials continue to deteriorate, we'll back off it. But for now, I think we're going to give it a little bit more time. Our industry in focus today, NYSE Tech Services. Over the past 6 months, this industry group has outperformed the S&P 500 by 4%. And its power bar ratio, which measures future potential, is very strong. 12 bullish or very bullish stocks for only 3 bearish or very bearish stocks. It is currently ranked number 6 of the 21 subsectors that we look at, and it has moved up 4 slots over the past week. Now, some of the names there that you should consider as long ideas when you can check the boxes and when the weight of the evidence says it makes sense. NXPI Semiconductor, NXP, Accenture, ACN, and Oracle, ORCL, all have very bullish Chaikin power gauge ratings. But let's look at the fun now, because I'll tell you that all of those stocks are closer to overbought than they are to oversold. So let's take a look at the fun. Very bullish Chaikin power gauge ETF rating, strong trend. Notice that after a bout of inline performance, we're trying to move higher. Not quite there yet, but something we want to consider. Is overbought, money flow, bearish, above the rising long-term trend line. So this is kind of a mixed picture. So when I see a mixed picture in an industry group like this that's trading, that has a bullish power bar ratio and a very bullish rating, what we want to do is really get selective on our stocks. We want to dive in and look for the stocks within this group that meet the process. Right? We can't just go out and blindly say, hey, we want to buy the tech stocks in this group or even buy the ETF. I think stock selection is really important here. Drill down on the holdings. Look for the very bullish and bullish stocks that are outperforming the market with bullish money flow and get them when they're oversold. Start to build your lists. That becomes important. I'd also point out, for those of you who read my note today, we look at the SPY. SPY is closer to overbought than to oversold. So I think you got to temper your aggression a little bit. Continue with the process, but temper your aggression level just a bit here. Trending names now. Yesterday's S&P 500 gainers and losers. Memory stocks continue to rebound. WDC, Western Digital, up nearly 5%. Micron up nearly 4% as memory prices look to be firming up. Align had some positive sell-side comments to send that stock higher by 4%. DaVita, DVA, down 5% in each of the previous 2 days. Sees a bit of a rebound. And then Noble moves higher by 3.75% on that strength in oil. Now, Hanesbrand, HBI, and PVH came under pressure yesterday as Levi's traded lower on the day. Levi's had some decent earnings, but wholesale shipments declined, and the stock had moved higher into the print. So Levi's traded down 12% yesterday. That dragged down some of the other names in the group like PVH and HBI. UNM was initiated underperform on the sell side, sent that stock lower by 4.86%. WAB caught a neutral initiation, sent that stock lower. GWW didn't see any real news to drive trading in that name. So now on Thursdays, we look at breadth. What we're looking at here is the advanced decline line for the S&P 500, and you can see that is in gear with price. After this breakout that preceded the breakout in price for the S&P 500, the advanced decline line continues to move higher with the index. That lends us a breadth confirmation to what we're seeing in price. And it's a sign that there's a broad level of participation in the market. And a lot of the other breadth metrics that I look at kind of confirm that view, whether I'm looking at percentage of stocks above their 200-day, above their 50-day, or even above their 20-day. Getting breadth confirmation, and we're getting the breadth confirmation globally. I look at 33 different country ETFs, and currently 29 of them are trading above their respective 200-day moving averages. So breadth confirming what we are seeing in price, and that is important. If we start to see divergences here, you know, if this line starts to turn lower, even as the market is moving higher, that would give us pause. So far, we're not seeing it. Breadth confirming the price action that we're seeing. Rates back up as the cut is expected. Now, this is important, and it's a little bit nuanced. You might say to yourself, you know, Powell was dovish. Sets the stage for a rate cut. There is nobody participating in this market that's not expecting at least a 25% rate cut at the end of this month. It's priced into the market. This latest move lower was expectations of a potential 50 basis point cut. As the market starts to come to grips with the fact that a 50 basis point cut is less likely, yields have started to back up here a bit in the near term. However, the trend does remain down. TNX, 10-year yield, below the 50-day moving average. And look at the 50-day accelerate to the downside. Don't see that all that often. Below the 200-day moving average, both moving averages are declining. And we're getting momentum confirmation as the RSI is firmly in bearish ranges, routinely becoming oversold, cannot become overbought. That is a sign that momentum is confirming the trend lower in yields. Again, wouldn't be surprised to see a bit of a backup here as markets kind of reprice the odds of a 50 basis point cut. But the path of least resistance for yields continues to remain lower. And again, look globally, we still have compelling interest rates relative to a lot of developed countries. So keep that in mind. Retail, on the other hand, refuses to join the equity rally. What we're looking at here is the XRT, the SPDR S&P Retail ETF, and we can see a steady trend lower below the declining 200-day moving average. Rally attempt failing at resistance. And again, remember we talk about momentum. Look at how retail has not been overbought in more than a year, and 1, 2, 3 times becomes oversold. That tells us that momentum is strong to the downside. And even now, even with this rally from 39 to 43, RSI cannot get out of bearish ranges, is now beginning to turn lower. So on an absolute basis, the trend is down with a momentum confirmation, and on a relative basis, you can see a nice steady downtrend here. Retail, want to avoid it on the long side, want to look for bearish opportunities. If you do trade to the bearish side, take a look at Lowe's. Very bearish stock, weak trend, weak industry group. Underperforming the market, overbought with bearish money flow, and triggered a sell signal here today at Chaikin Analytics. If you do trade to the bearish side, you might want to consider some put options or bearish put spread in a name like Lowe's. Take a look at that if that is part of your process. Lowe's on the bearish side of the coin today. That's going to wrap it up. Head over to ChaikinAnalytics.com/today. Sign up for that email. hits your inbox every day at about a little before 9:15. So you'll be able to follow along with this show. There's stock ideas for you to consider. I will be back here tomorrow. Have a great day.